Mosley here with the Daily Forex Trading Outlook. Markets returned from long holiday breaks today, but it has not inspired trading. As you can see, ranges have been relatively tight. Dow, for the most part, is slightly on the soft side, but it almost feels like we're in a holding pattern. A question for today is Ukraine a factor, and or will it become a factor? If you look at traditional safe havens in times like this, the U.S. dollar, the yen, Swiss franc, none are exhibiting any kind of safe haven appeal here. Typically, the euro would be under pressure because of the energy dependence on Russia as this mini Cold War ratchets up and this political market goes on for longer than one would expect. But so far, that hasn't happened as well. Euro just bounced back above 138 in a market that it seems to be biding its time. Everyone seems to be looking at the same factors, by the way, and then we'll go into charts in a second. Draghi, German IFL tomorrow, but then Draghi speaks on Thursday. Market expects him to be on the dovish side. Maybe even talk the euro down if he addresses that issue in a keynote speech. I think it's in Amsterdam. If that's the case, euro dollar will have a limit on its upside ahead of that. But then the following week, I think it's the end of the month, we have flash, as I mentioned yesterday, flash European inflation numbers, and expectations have been, I haven't seen the forecast, that they're going to tick up, and that's going to set the tone to the ECB meeting the following week. So you kind of have a limit on the euro upside ahead of Thursday, and maybe a limit on its downside if the market forecasts are for a higher inflation number the following week, and that's kind of the market we're trapped in right now. If you look at charts here, no change to what I said yesterday. Key levels here are 130, around 136.70 and 139 and 139.67 on the upside. We're kind of stuck in the middle. You look at the moving averages kind of turning flat. 20 days around the 138 level, and the 138, by the way, is going to set the tone going forward. If you look at the 4-hour chart, we do have a trend line here, but that comes in. It's going to be coming in very soon around 138.30, which is also the current resistance. On the downside, we got close, but not close enough to the around the 137.79 level, which I mentioned was key support. We got down to around 85 overnight, and we've bounced since then. 1-hour chart's not showing anything spectacular. Look at the 100-hour, 200-hour almost going flat here. And that's it for today. I mean, I think the market seems to be on hold. Ukraine would, we'd like to see Ukraine become a factor only so markets would move, but it seems that, and it looks like the U.S. is going to ratchet up its sanctions if Russia does not step in and they kind of put their back against the wall. But really, that's what we're in. In this regard, I wrote an article yesterday called "How to Trade in a Low Volatility Market." The link is at the bottom of this this page here. This the video. I think you click on it. I think you'll find it. The perspective is quite interesting because we are in a low volatility market. It's a time to stay alert, but a time also to adjust your trading strategies. As follow through tends to be limited. By the way, so click on it. We'll. Sorry that there's no grand ideas here, but that's the market we're trading in right now. So I'm treating it as a range until we see either side of 137.80, I guess, to 138.30 to 50 gets broken. Okay. Good luck. Good trading today.